morning. There's still a few people having breakfast, but they'll miss the first 5 minutes or so. But Matt's on a tight schedule, and I'm delighted, as always, to have my old friend Matt Roszak join us once again. Yeah, you can do a round of applause. Matt was a speaker and sponsor at the very first CoinAgenda in 2014. And I had mentioned earlier about our conversation because the price of Bitcoin had just dropped below 300, and we were texting each other, and you said, if it goes below 300, I'm selling the family silverware and backing up a truck to buy Bitcoin. And as soon as it hit 297, I said, you got the truck rented? Well, obviously, I don't know how much silverware you sold, but you are listed now and for several years in the Forbes billionaire list under crypto folks. And so obviously you've made some very good decisions over the years, both as an investor. And I remember a couple of years ago when you came to me having known you just sort of as like, kind of one of the, smartest and most active investors in terms of, you're like Zelig, I'd be like going, oh, Anthony Dior is investing in China. Oh, Matt's there already. Okay, so-and-so is doing this in Singapore. Okay, Matt's there already. Oh, there's a deal going on in Berlin. Oh, Matt's there already. So, I know we're going to talk more about the future, but what in the early days sort of inspired you to get on the road and just like seek out all these opportunities in this really nascent market of like, say, 2013 to 2017, I'll break it at?
Thanks, Michael. It's great to be here. These conferences that we've had, and we've been to a lot in the earliest days of crypto, and sometimes the conferences were like, 20 speakers, but there was one person on stage and 19 people in the crowd. So it was that early where we're all kind of learning from each other. The speakers were the audience were the speakers. So super early days. But the first part of the journey was actually, I did what I think a lot of people did back then is I went to talk to all my investor friends, professional investors, venture capitalists, hedge funds, asset managers, and this is now circa 2013. And I was like, this Bitcoin thing looks really interesting. You can mine it. There's no centralized government or company behind it, and it was such a new novel concept. So I went up and down Sand Hill Road. I went to a lot of my friends, and I was like, this is like something I'm spending a lot of time in. And back then, venture firms were unable to invest in Bitcoin because if you look at their documentation, they have limited partners as investors, and they're excluded from investing in oil and gas and real estate and currencies. And they're like, well, that seems like a currency, so we're going to pass. So I was like, okay, I got zero love from my kind of investor network community. So what I did is just focused on the developers and focused on the builders in the space, and got to meet Vitalik before Ethereum. At the conferences, he was getting paid in Bitcoin to write articles for Bitcoin magazine. Was trying to advance the ball with Bitcoin, didn't work out with the Bitcoin community, and then I remember in Miami where they're walking around with Ethereum T-shirts, passing out this white paper, and it was actually the first kind of coordinated kind of go-to-market.
We did the press conferences for that, so yes.
It was just absolutely wild. But that was actually the advantage I had. I had no love from traditional investment community, and I focused all my time with the developers. So, CZ a couple years before he launched Binance, my co-founder is Jeff Garzik. So the third core developer in Bitcoin. So literally from Satoshi to Gavin Andreessen to Jeff. And so I'm fortunate to be building Bloq with Jeff and all the things that we do. So that's the, I don't think it's any big secret, but you follow developers, and then you look at that from a macro standpoint on follow the developers in all these protocols, layer 1, layer 2, where's the energy, and it's all about the developers. And that's kind of how you heat map the space and kind of find that path.
So Bloq, when you first launched, as I recall, we helped you with the launch of that, and got you some press. Of course, I remember the timing of it was that it was at a consensus that was the same consensus that Craig writes that he was Satoshi, and so we got all these interviews for you and Jeff, and everybody's like going, "Well, Bloq looks interesting, but what about Satoshi? Is he?" So at any rate, it's still got Bloq's name out there. And now, in the beginning, I remember the original vision was to go, and because Jeff, who's for those of you who don't know who Jeff Garzik is, not only is one of the original core developers of Bitcoin, but also chief scientist at Red Hat. And so, really, I don't think anybody has more experience taking open source software and doing things with it.
Yeah, I mean, working with Linus Torvalds at Linux and then Satoshi with Bitcoin, that intersection is totally rare.
Exactly, it's a one of one. And so, it just seemed that I remember the original vision was to kind of almost make Bloq an enterprise grade Bitcoin services company, just like Red Hat, became a big company and then sold for $38 billion to IBM by basically taking free software that people were screaming, Linux should be free. Why are you charging people? It's like, because Fortune 500 wants tech support. They don't want to wait for the next upgrade and do it themselves. They want to have somebody who's like answering the phone and like sending out account executives and reps and things like that, and having an upgrade schedule. How much of that is still core at Bloq, and how much have you turned more into kind of an incubator of DeFi and other new projects?
Yeah, it's pretty exciting when the ground shifts underneath your feet in crypto and new elements, new areas develop. And so we've been trying to be thoughtful about that. And we started with infrastructure, which we provide nodes and staking and data for a lot of protocols. And that infrastructure business gives the team a lot of advantage in terms of understanding how these networks work, how they interrelate, and kind of making sense of a lot of things in this super fast expanding space of crypto. And then the developers that we have. So when you hire a developer, and it's so funny in crypto, it's like at the end of everybody's email, they're like, oh, if you have any smart contract developers, let me know. It's like nobody does that. Nobody like you hide them, and like they're like pink polka dot white elephants. They're just the rarest thing on the planet. But the good developers, the best developers, it's not necessarily they want to go work for Coinbase or FTX or whatever. They're building their own companies, their own platforms, their own projects. And we've been fortunate to have a team that thinks that way. And so Bloq is infrastructure and innovation, where we've launched several projects in the DeFi space with Vesper. That was spun out with Jordan Kruger, who's CEO of that. Vesper is about 300 million in TVL right now off of one product. So we've kind of professionalized the DeFi experience. We were super inspired last year by this explosion of DeFi, but it's still a little off-putting to me in terms of UI, UX, unknown teams, testing in production, no audits, all that stuff. And so we took all those elements and incorporated that into Vesper.
So Vesper really is sort of, people talk about, TradFi, CFI, and DeFi, and there's a battle going on now in the governments between like, are stable coins going to be regulated? Do they have to be banks? Should DeFi be regulated? You've actually, you don't have a nickname yet, by the way. I mean, it's like I'm the godfather of crypto. I mean, there's like all sorts of other things. And I always think of you as kind of being like the Barack Obama of crypto, because like, seriously,
you're Barack, but that's
yeah, I know. But I mean, didn't you give him his first, you gave one of the top politicians one of his first Bitcoins.
Clinton, yeah.
Clinton, right. And, you're always there just kind of supporting very quietly, the chamber and like, anybody, Binance Charities. I mean, anybody who's like really doing good things for the ecosystem, but you're very quiet about it, very humble about it. And you always show up, after like, even if you had a 22-hour day, you always show up with every hair in place, like Barack, I mean, just, you're very gentlemanly, you're very, it's hard to like, I always figure if anybody has Matt Roszak as an enemy, and I can't actually think of anybody, it reflects badly on them. So at any rate, that's kind of how I think of you.
Well, I mean, showing up in crypto, because we were starting this, like, I don't know, like I feel like we were like on a concert tour of crypto conferences for the first 5 years back in 2013, and we traveled a lot. I mean, we were all over.
You and I were always on every investor panel. I was either moderating or you were moderating, and there would be like 3 other people.
But that was a little bit of the hack. You just show up, and like people are asking questions, people are asking for a job, funding, ideas, advice, and you wind up, surfacing pretty cool stuff that way.
Yeah, my wife actually, many of you met last night, Maxine, or during the course of the show. She noticed during that January 2014 conference that, where we launched Ethereum and a lot of other things happened. She said, I've been watching you at tech conferences for years, and you're usually walking around trying to meet people. Here, you were just sitting in one place, and people are coming up to you. So Inside Bitcoins had said, we'll pay your way if you want to go and travel around the world and be on our panels. And I was like, oh, I don't know, where is it? Berlin and Hong Kong? And she's like, go where you're loved. And so I've tried to follow that. And, it really led to a ton of relationships and opportunities, just simply hopping on a plane, like you said, and going, where if not loved, at least known. And that's why I spent 6 weeks in Dubai this year. And I'm sure you've spent a little bit of time there yourself.
No, I mean, and now we're, post-pandemic, getting back on planes and thinking about how to do that a little bit more purposefully and trying to shoot the score more when you go back to Singapore or Tokyo.
Does Zoom change it? Does Zoom change the need to go to Singapore as often?
I think some relationships matter, network matters, and some people, you see them once every couple of years, they're fine. Other people want more interaction, more.
I will tell you the one thing Zoom will never replace, although it may be just a few upgrades until they can really get the kind of like multiple room controls in, is you go to a cocktail party, like our opening party or, last night, and I see you talking with someone, and I walk up and they say, Mike, you want to meet so-and-so? He's a good friend of mine. And you can't do that on a Zoom call. It's very difficult. There are some Zoom rooms that have like multiple breakout sessions. But I mean, for example, last year was our only CoinAgenda Global that was a virtual. And the upside was we got presenters from all over the world. The downside was I wasn't able to walk up and like kind of have, a drink and conversations with them. So I watched all the presentations, but I kind of missed that Axie Infinity might be special and participate in their 10-cent.
We're going to be doing all this in the metaverse going forward anyway, so it's all good, Michael.
Okay, you think so?
I think there's a massive opportunity there in the NFT world, and it's right now it's kind of the early days, but we're like this digital anthropology that's happening, and like Web3 ingesting all these artifacts, art and music, and pretty soon tickets and titles to homes and all this
already
stuff.
Tickets, already titles to homes. I'm an investor in Yellowheart. Their actual main investor is Live Nation and Ticketmaster, so that's already at least nascently happening there. But yeah, you want to talk about the future? You said not about the past. So the second half of this talk, let's talk about the future. We'll start with DeFi. DeFi has gone from like nothing. I mean, less than a billion under, not in management, under
TVL, total value locked.
Thank you, locked, TVL. Right. Need more coffee.
Well, no. I mean, it's gone from 0 to 1. It's about 100, punched through 100 billion now.
238 is the one I saw yesterday.
On DeFi Llama. Yeah, I mean, there's like, 100 to 200 billion DeFi Pulse, DeFi Llama, but it's now a thing. And it's real money testing. So this is real money into these chutes and ladders of lending and borrowing and yield farming and everything else. And I think that's going to get more attention because you have institutions now all getting exposure to Bitcoin and Ethereum for the most part. And then they're saying, okay, what do I do with this? How do I, put this on a treadmill, make it work for me, or get a better yield, participate and stake and underpin some of these networks. And so the staking and DeFi components of this industry will capture a lot of that momentum as institutions have it on their balance sheet, and then they want to like financialize it or have it do something. And so that's going to be another wave of DeFi.
So the next 4 years, I think, is going to be very interesting because we'll most likely have a parabolic run up in the next 6 months. That's historic. And then we're going to most likely have a crash. And the crash, each of the last two cycles have been 85%. There are many people who say it's going to be a softer crash because it's mainly institutions. And I think a lot of it is going to be, does retail FOMO into Bitcoin again? Because if they did, that's when you're going to have like the 250,000 high instead of 100,000 high. If the institutions take it to 100, it's probably not going to crash down to 15. But if, new retailers say, well, I better go and sell my Dogecoin for Bitcoin, yeah. and they buy it at 150 thinking it's going to go to 300 and it only goes to 180, I could certainly see it going down 85% as everybody's, again, screaming at 20 or 30,000 that Bitcoin is dead.
Yeah, my sense is like Bitcoin will be a little bit more resilient than it was historically, and then the hands that hold Bitcoin are going to be a little different from the previous cycle. I think more institutions, more balance sheets are holding Bitcoin, so it'll be less sensitive that way. But the other, you know, uh,
But the number of
10,000 cryptocurrencies
whale
will,
wallets is still higher than it's like ever been.
yeah.
So that's an interesting paradigm. I mean, obviously,
And that's what will cushion
yeah.
some of the blow where others are.
So
Are gonna be
variation
running.
of what I asked Caitlin, and I worry about this, but I'll be interested in your answer. Wall Street, got its wish in that the first ETF wasn't something that actually, bought physical bitcoins, which would have sent the price skyrocketing, and they wouldn't really have much to do with it other than tiny fees. It basically was letting them go and raise a couple $1 billion for an ETF of Wall Street nonsense. I mean, so it's the futures, and you're paying for their futures performance. And since it's launched, the price of Bitcoin went up 8% as of yesterday. It's down a little bit today. And their stock went down 2%. And apparently, as Caitlin had mentioned, that's happened with oil. It's happened with a lot of other things. And Wall Street still has this great ability to kind of, make money out of thin air, fool the public, and get the regulators to go along because that's probably their next job after they get out of office. Can they crush Bitcoin over the long term by basically making 100 paper Bitcoins for every real Bitcoin?
Not sure I understand it, but no.
Okay.
Absolutely not.
Paper Bitcoin meaning like that they're going to have so many things that are just options and derivatives that people think are Bitcoin.
The ETF that launched was not that inspired from being in the Bitcoin community or anybody in crypto. But you're seeing Wall Street putting a foot forward in this space. Again, building products for clients, an ETF on futures, and they're going to continue to plow into the space. And that's most of this industry was a bottoms up phenomenon. So this is retail innovators, risk takers, etc. Now the top down is coming from institutions. And again, that 100, 200 billion DeFi market, these are trillions now that will come in. But the compliance, the regulatory dynamics, the custody, the tax, the structure, all these things that they're thinking of is still a little ways out. So the first step is like get Bitcoin, get Ethereum, catch your breath, and then figure out what to do next.
Do you see a day in the next 5 years that JP Morgan will have a 8%, or maybe for them it would be 4 and everybody's happy, CeFi product, and basically say everything else is illegal, and then go with the JP Morgan CeFi? I mean, you had Christine at your dinner last night, and she's great, but she's still said if, because I offered, put her on a panel at CoinAgenda Caribbean, she goes, ooh, you have the name Coin in it. I got to check with my compliance team and everything, which is kind of crazy because they actually, I've got an account with JP Morgan, and they know I have Bitcoin, and they're cool with it on the private banking side.
So DeFi is a massive phenomenon now, and it's permissionless. And anybody, you, me, a goat herder in Ghana, a taxi driver in Indonesia, anybody could go borrow, create yield on their assets and make their crypto work harder for them. And that's a huge unlocker for people. And then the regulated industry is going to participate in DeFi maybe in a different way, where they'll take certain DeFi projects, photocopy them, put a KYC AML header on there, and continue to grow that out in a permission basis. So JP Morgan and Morgan Stanley and Citi all have clients in a pool. They leverage the same kind of underlying tech, and maybe that's their start. As those pools get bigger, and how does those regulated pools kind of play against the decentralized permissionless pools will be interesting to watch.
So Aave jumped today when it got listed on Upbit. The pure DeFi that even people who have been in crypto for a while say it's above my pay grade, or it took me a year to figure it out. And William Quigley, who's going to be speaking in Puerto Rico, and his partner at Magnetic was supposed to be here, but she got ill. He said he spent the first DeFi summer plowing $40 million into the DeFi space. He said he made money on it, but he said he would never do it again in terms of the deep dive that he took. He said he woke up every morning thinking he was fabulously rich and then think he was broke 5 minutes later. And in both cases, they were kind of like true.
Yeah, and back then it was back then it was super cumbersome. It's getting better, but it's like, when in our Ethereum grow pool, where you deposit Ethereum and you earn Ethereum. So that Ethereum goes to maker creates DAI, that DAI goes to a lending market, and then goes through a DEX to get more Ethereum back at the front. And so that orchestration of going through all those Lego bricks of DeFi into one kind of click is really important. But you got to get it right. You have to get it audited. You have to
And is that the essence of say Vesper?
Yeah, and a lot of other,
second generation DeFi.
Yeah, you're composing different strategies using different Lego bricks.
Because that's exactly the first. I mean, one of the brighter people that I know in DeFi who got in really early. He bought YFI when it was like $10 or something like that. And it went to 600. I was looking to buy it, and I go, so explain this to me. He goes, oh, it's simple. And you go exactly what you said. And I was like, wait a second, that's a lot of work.
It's a lot of work. It's a lot of risk, a lot of fees in terms of gas and all that. And so it just makes a lot of sense to kind of compose those and then have different ones for different things. And the next pool we're launching is, first one is Vesper Grow. This one's Vesper Earn. So same primitive, deposit ETH, but you could earn something else. So if you're an ETH hodler, deposit, and then you could earn USDC or another token. And so this dynamic of programming your yield is going to be a new kind of primitive in DeFi.
When will DeFi, purely consumer driven, without the bank's involvement, be as simple as in the early days of the internet, people said it would never work because nobody wanted to get a second modem, and it was too complicated and the product was too bad. And now it's like, my mom is never going to use it, was a common quote. And now it's like you throw an iPad to mom or grandma and say, here, press the button, you can watch Netflix. When are we going to have DeFi having anything close to that experience?
Yeah, I think it's we're getting closer to that, where in your wallet there'll be a button to say either
earn 10% on your money. I think everybody would press that button.
Well, that, but it's also risk. So sometimes not everything's created equal, and there's certain returns and yields and APYs and DeFi that are really high, and they might be riskier than the ones that are lower.
So you can have a sliding scale, and you could say, here's how you can go and make 50%, and we're going to automate putting liquidity pools into various areas, but you have a 30% chance of having a much lower return because of these risk factors. And of course, none of this is FDIC insured or anything else, versus, here's what we feel is our safest product. It pays 7.1%, and the track record and the smart contracts all add up that you likely have got, historically a less than a 5% chance of making less, and you're less than 1% of losing money. There's no rug pulls that's been code audited by the best code auditors, et cetera.
Yeah, and you want that simplicity ultimately for grandma on how to maximize your crypto or whatever.
Because quite frankly, CeFi has gotten rug pulls too in a different way.
Yeah. No, I mean it's so understanding the risk, but the simplicity to say I've got crypto sitting here, I want to put it to work, right, and compound my my holdings. And so I think DeFi does that more. I don't know if it's robo-advising or decision support, but there's going to be a new kind of element where in crypto where it's always kind of the other thing that I love in DeFi is streaming payments. So not getting paid on certain intervals, or even so I think change how payroll and other things are done, getting paid on the 15th and 30th. Here you get streamed every second, so you're earning money or yield or getting paid in a streaming fashion, which I think is super cool.
The last question before I turn it over to the audience for a question or two before you have to leave would be, what does Web3 mean to you? Is it cross-chain? And where do you see this taking this coming generation of products and services?
Well, Web3 is super interesting to me. So in the, I guess, 90s, there was internet that was served on the silver platter for you. So you had like CompuServe and AOL and Yahoo. And then it kind of got blown up into 1,000 different pieces of all these different components for your web experience. And then you kind of realize, I was thinking like when my grandkid asked me like, so what was the internet like back in this last 20 years? And it was like, it was born and financed off the back of ads that we didn't look at really. It's like, it's kind of an uninspired revenue model and kind of financing of this amazing thing called the internet. And so we're kind of in the medieval times of the internet, because we're kind of the product. we're getting all our data ingested, and we're kind of reacting to these experiences. Web3 is going to be a lot more inspired and a lot more equitable, where your time and attention is a menu and has a price tag for it. Whether you want to look at a watch ad or a car ad or be interviewed, all that stuff is now going to be yours. And so we're going to have like these, it's kind of technical, but our own node on the internet, which is how to get my attention. It'll be my own Siri, my own Google search, my own wallet, my own shopping cart, and all that stuff will be kind of organized by you, and then others will kind of connect that way. So it'll be, again, a lot more equitable in terms of how we participate. And then these Web3 dynamics, whether it's compute, storage, whatever, these are just data cooperatives of people contributing all that. But that orchestration of that to have like a Web3 experience like you would at AWS today is still a ways off. But it's no longer is it going to happen. It's absolutely happening.
In the multi-chain future, where basically, doesn't matter. I mean, Andreas said this years ago. He said, anybody who thinks I'm a Bitcoin maximalist hasn't been listening to me. I believe in, one wallet, many chains. And it's all going to be able to go back to Bitcoin as your ultimate store of value. But Bitcoin is not going to be ever your fastest. You're never going to use Bitcoin as your prominent DeFi network, or you're never going to use it as your prominent way of, minting NFTs.
Yeah, and then it's like people are saying, oh, do you like Ethereum or Solana? I like them all. And I do generally think that Ethereum is more of the grand central station, and there'll be offshoots to Solana, offshoots to Avalanche, and then those will take bite in certain industrial use cases. But I think Ethereum right now is pretty hard to displace. And again, everything's everybody freaks out like, oh, it's not scaling, or it's this.
Ethereum or EVM, because Polygon just passed Ethereum in terms of transactions.
Yeah, I mean it's a moment in time. It's a picture today, but this is a movie. It keeps evolving, and these railroads keep scaling more and more.
And of course, Polygon needs Ethereum. It's not Phantom doesn't need Ethereum. Some of the other EVMs, Binance Smart Chain doesn't need Ethereum. It's copying Ethereum. Polygon, though, needs Ethereum because it's a layer 2, and it seems to be winning on the Ethereum alternative game.
Yeah, no, I mean, but it allows faster innovation and iteration when you go on Solana and some of the other ones versus Ethereum saving gas fees and kind of getting out there faster. That doesn't mean that the project might not go back to Ethereum because of some of the market benefits of doing that. So we'll see. I think it's the innovation and the pace that things are going at is incredible.
Questions for Matt Roszak.
I love that you said that about Polygon, by the way, because I love their plasma bridge and it actually works and it's super fast, and then it means I can go back to ETH2 anytime I want. Questions in the audience? Who wants questions?
Any questions?
Okay.
What do you think about the future of multi-chain applications where, I guess, multiple chains will be used at once in one application?
From a builder standpoint, it's really hard because all the tooling and everything else, the testing and all other stuff is still kind of wobbly, but people have to do it because they want to participate in lots of networks. So like in DeFi, you typically start on Ethereum, and then you go to like an Avalanche or a Phantom, etc., and then you inspire their community with the pools and the products that you build. And so I think
Tether would be a good example. It started out on Ethereum, and now it's on 4 or 5 different chains, and it just moves to, again, be a solution for their chain.
Yeah, because everybody's building chutes and ladders of DeFi on their railroads, and so you kind of need to plant a flag there. But fast forward this, so you have a flag, planted on the top 10 EVMs, and then you're kind of watching it like a heat map to see where the flow of funds, where the communities, where the users are going. So you have a flag where that ultimately settles.
And I mean, a year ago, both Phantom and Polygon were like a penny.
Yeah.
Now they're like $2, $3. I mean, at what point do you get excited on the heat map? Do you sort of see it kind of early from the community? Do you look at the charts and graphs and analytics, or do you kind of talk to people, or a little bit of both?
I think it's a little bit of both. You see the raw data, and then you see like in discussions the community, and again follow the developers. There's a lot of action on Solana and Avalanche and Phantom Cardano has crazy market cap, and I still don't see enough deals in that space to help me get super inspired on that. So everything's not created equal, but from a developer standpoint, it's a little unnerving that you have to go and launch on 4 or 5 different railroads just in case one kind of starts to go to the moon.
One more question.
Hi, Matt. Where do you see the equilibrium point of single-sided stakes or lending, whether it's just a straight up USDC that's like at 8 or whatever it is right now, and then also some of the other incentivized crazy return type stuff? Where do you see those returns going to?
Sustainability of returns in like DeFi?
Yeah, sustainability of returns.
Yeah.
Yeah.
So DeFi is a very elegant model. So you deposit, you become a user of this, and then you get 2 bites at the apple. One is you get a participation right in those fees that are generated by that, and then 2, you have governance. You have a voice in shaping that particular project. So it's a super inspired model. But you're also incentivizing users to deposit because you're giving them some of your network tokens. And so how does that sustain? And then the metric that I think is going to be more and more important in DeFi is you have all this TVL, total value locked AUM in these chutes and ladders of DeFi. And then the quality of that TVL, meaning does that 100 million just hop around every 3 days or 3 months? Does it stick? And then, the thought is that over time, some of these DeFi
And read the fine print, because some of these TVLs will lock you in for a while. Will have like a double-digit exit fee.
Yeah, and just to see how that TVL sticks in there, and if it's healthy, because the name of the game of this is like set and forget, where you have people depositing, they're earning a return, and they're happy with that, and kind of growing those pools, making those sustainable over time. I think you could find yield in crypto, pretty easily. There's different risks associated with it, but it's hard to ignore with all the stuff that we see out there with shelter from inflation and all the other dynamics. So I think we're going to have a herd of people and assets coming into crypto trying to find that for themselves.
I was going to say, if you with Vesper and or other projects can make a set and forget button that I don't know how many tens of millions of Americans reaching retirement age are going to go and say, oh, I can set and forget and get like 10, 11, 12%. You would have a multi-trillion-dollar market cap overnight. Similar to, if you want to take a little bit more risk, there are people right now who put, one of their main income sources as retirees is doing hard money lending. And that's complex, takes a lot of paperwork, and your risk is that, they just give up the project, and then you got to go and find a buyer for the home. We've got some realtors in the crowd who know that pain. It's when are we going to get to set it and forget it at a $1 trillion level, would you think?
Probably in like 2-3 years. I mean, I think
awesome.
This is moving really fast.
Well, I was going to say, we're already at 250. We're already at $250 billion, but it's not set it and forget it for Aave, for example.
Yeah, no, I mean, and there's some complexities in DeFi because you can't. It's not as set and forget in just depositing, but also when you interact with some of these systems, you have to claim, you have to redeem, you have to. It's not like a passive experience. It will become more passive as these wallets become a little smarter and they have like libraries to do things easier.
I basically call set and forget at the Maxine test. So my wife my wife spent quite a few years running a 30-person mortgage brokerage company. So if she looks and says this looks safe and set it and forget it, I have to explain a little bit of the code stuff for her, but she at least now is comfortable with the terms on CeFi products.
No, I mean it's over the next year, I think we'll 10x what's going on in DeFi, and I think that's at least half in price appreciation and at least half in more TVL.
Fantastic. Thank you, everyone. Thank you, Matt Roszak.
Thanks, Michael.
Thank you. Can we have our judges come